Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter or X or whatever, talk about wealth building, financial related topics, or commodities that I typically follow. And commodities are the things that I follow now just because that's where the value is in the market. So let's dive in to see what people are talking about and look at what they're posting and sharing on Twitter. If you want to follow me, it's at finding_finance, or you can join us on our community, finding-value.com. We do have a platinum question and answer session coming up at 7 a.m. on Saturday, Mountain Standard Time. Chart of the day. Wow. So he's comparing the 2008 chart and 2023 chart side by side. Look at the similarity or fractal between these charts. I also inserted silver's chart from 2008 to 2011 to show the potential move that we may be coming if the fractal or repeating pattern comes to fruition. What this looks like is 2008, 2009. We had a downward move, some low point that looks very similar to the low point of 2022, 2023. We came on up just like the same type of pattern in 08 and 09. Now, I don't know if the market conditions are necessarily the same. I don't think so. But that fractal sure looks the same, which means we could be similar in terms of its bottoming pattern. This fractal, the circle, is located where this is here on the chart. So you can see there was a low. That's the low of these two. It's come on up to some degree, but we're still in this type of area where the circle potentially could be. Are we here in 2023? And then we've got a long way to go to the upside for silver. And remember, this is not a long-term chart. This is a shorter-term chart of 2008 to 2011. It's only 3 years. So it's closer than what people think if this fractal were to play out. And I like how people are using the word fractal. I like it. I came up with that. Well, not originally, but I've been going over a lot of fractals, and it's good that other people are comparing fractals that they are seeing. It's good. Patrick says, seriously, everybody's still asleep? The 7-year rate of change for Canadian inflation is rocketing upwards. See how crude oil loves this. So what do you mean we are not in a secular inflation cycle? So this is the Canadian Consumer Price Index since 1950, and you can see the 7-year rate of change and the crude oil price being very similar. We're also having a gigantic 7-year rate of change higher in the Consumer Price Index, and oil is looking like it's ready to move on higher. Now, this is long-term patterns. They're not short-term patterns here. So this can bounce around a lot in the short term. You can see here that this one was a 7-year rate of change, and we also had a pretty big pullback in the beginning of that. So we had our pullback just like we did in 2001, 2, and this is a 3-wave upward move. So it's wave 1, wave 2, wave 3, wave 4, wave 5. We've got wave 1, wave 2, and are we starting wave 3? Some people say we are. Some people say that there's going to be a recession and it's going to delay it. I'm not exactly sure what's going to happen in the near future, but I can tell you everything looks aligned, and it looks very good for a move to the upside for oil, in my opinion. So that's what I think. ES and SPX from Haas, HOZ. Wave 2 are powerful. Participants often confuse this retracement with a new uptrend. So what this is called is a bear trap. Bull trap, sorry. Bull trap. Overlooking its role as a correction of the initial decline. Traders who shorted during wave 1 cover their positions, convinced the downtrend has ended. Wave 3 is when the reality of the bearish trend sinks in. More traders and investors join in selling or shorting the market. This collective action further accelerates the decline. Those who were previously optimistic or hopeful during wave 2 corrective upward movement might capitulate and start selling as well. Wave 1, wave 2, wave 3, wave 4, wave 5. And this is the S&P 500. I do think that this is coming, and I think commodities are going to do the exact opposite. So commodities are in an upward wave, 5-wave move. S&P 500 and NASDAQ are in downward moves. The downward moves are going to provide liquidity. So it's money being sold out of this market and going into the commodity market. That's how I envision the money rotation. So I think HOZ has got it correct. Now, here's the question that I think a lot of people have, and I don't know the answer, but I'll ask the question so everyone's aware of it. Is this sell-off going to impact commodities? I don't know. I don't know what that's necessarily going to look like. We know that this impacted it here, but is it going to impact it here? Some people say, oh, most definitely so. Well, we can have the S&P 500 collapse due to increasing interest rates, but we can also have inflation as well. So I think it's a difficult answer, and I don't know exactly what it will look like. And we could be tied together at some points and separate at others. Difficult to say. And Preston says, this is what the start of hyperinflation looks like. Everyday citizens waking up to the reality that something is very broke. It's the money. Governments around the world do not have a solution to this problem. If you actually have any disposable income, buy some Bitcoin. At least that's his opinion. And this is the cost of living crisis is astronomical everywhere. It feels like we're just working to barely survive. Compilation of videos with people talking about the struggle going on. And maybe we are entering a very inflationary period, and maybe there's nothing that governments can do about it. Maybe there is no solution. When I went on Palisades, he asked me something about this. I said, the Fed is backed into a corner, and they're going to have to handle an outcome because there's not going to be a solution. So it's not a problem. It is a predicament that they're in. A predicament is where you have to handle outcomes. A problem is where you can have a solution. I think they're in a predicament, and I think that inflation is the outcome of either thing. They can't slow it down. They're screwed either way they go. That predicament is if they raise interest rates to kill the credit lending problem, then they run a problem of interest payments and inflation coming from the interest payments on the debt. So either way, they're going to get inflation, I think, to some degree. Which one's worse? I don't know. We'll find out. Bond market is saying something is seriously wrong. Credit event coming. The bond markets, I mean, we're just ripping to the upside in yields. Yields are ripping higher on the 10-year, 30-year, and even the 2-year. Is something seriously wrong? I can't say that I know exactly what this all looks like. I mean, I've never seen it in the U.S. markets, but I'm sure other markets around the world have experienced this. And when they experience it, generally those who do well are in precious metals and things that are inflation resilient. Economic growth doesn't cause inflation. In fact, the weaker the U.S. economy gets, the stronger inflation will become. A weaker economy produces less and results in the government borrowing and spending more. The Fed ends up monetizing the debt. More money chasing fewer goods. And I think this gets forgotten amongst a lot of people. They think, oh, the economy is going to go down and inflation will go down. I don't know if it will, guys. I mean, we'll see. That's where I'm at. We'll see. And I think it could be stagflation, and that's exactly what Peter Schiff has described here. It's stagflation. It's the economy weakening while inflation actually goes up. How much further do you think or dare waiting to buy more global atomic, or buy your first global tranche? Well, I've already cost averaged in a little bit, and my approach has been to buy a little. Not a lot, just a little bit here, little bit there, and wait for the strength to come back into glow, and then buy a bunch into strength. I don't know, that's my approach. Big four is trending in the right direction. This is the big four storage: crude, gasoline, distillate, and jet fuel, trending downward. And we can see that trend 2021, 2022. In the yellow or green is 2022 down here. And then 2023, we're trending back lower. It says, love this video that's gone viral. Gen X struggled through many tough times financially, but saw a light at the end of the tunnel. Their kids, however, are drowning. How do they ever get ahead? Well, a lot of the good places in America, you're going to buy real estate in the best places, and there's only so many best places. And obviously, inward cities can grow outward, but some of these, if you're next to water or something like that, there's only so much to buy, and it's going to get more and more expensive as population increases. I don't know what else to say. And as the world competes against each other on a more level playing field, I think some countries are going to become less prosperous, while others become a lot more prosperous. Those coming from a third world country are going to become more prosperous, and those in first world countries could become less prosperous. That's my take. Who's your favorite billionaire? When I was a kid, mine was definitely Howard Hughes. Now it's probably Elon because of the diversity of his business projects and the sheer entertainment value he brings. Well, for me, my favorite billionaire is Michael Jordan. I always liked Michael Jordan. I always admired people who are very athletic. And what he did is he tied his athleticism and his kind of business savviness as a package. And I think that's probably pretty cool. I like that of him. So I mean, his shoes are still ridiculous, guys. He's still bringing it down with shoes. He owned what was it? Was it the Wizards and Charlotte, or I can't remember. I can't remember all the teams he's owned, but I'd say Michael Jordan. I've always liked Michael Jordan, so I used to collect his basketball cards and stuff. Joe Cassandra, what does he say here? He says we plan to move and ditch our 3.2% mortgage rate, moving to get into the best school districts for our 4 kids. 7+% mortgage will suck, but it's better community to be in. The returns equals our kids in top 10 elementary, middle, high school in the state. It's worth more than a mortgage rate. Why not private school? I'd rather live in a better community with slightly higher property taxes and the bus than a worse community and drive 30 minutes to school each day for a similar worse education. Plus, if private school is $10,000 a year at minimum, that's $40,000 a year for the next 10 to 15 years minimum. Why not homeschool? Never. I homeschooled for 1 year in ninth grade. It was awful. Going to high school is the best thing. I hope we stay rooted. So think about this as you're looking at homes. What are the school districts you are if you plan to potentially have kids? I live right next to an elementary school for the most part. I planned ahead. I was like, yep, they're going to go to this. The neighborhood's really good. The kids that grow up in this neighborhood are going to be, I'd say, middle to upper class, somewhere in there, middle-ish class, maybe slightly higher middle. And overall, it's a pretty safe area, very good school district. Kids are pretty nice. The area is pretty nice. So, I mean, that's how I determined where to buy a home. And it's also very easy to move east and west, north and south in our city. In other parts of the city, it's really a pain in the butt. The best part is that uranium is entering an infinity squeeze right as every other CUSIP falls. And then he says the selling only accelerates now that $100 was given on TLT. Only gets worse after expiration. Can't say I didn't try to warn you guys. So yeah, he's still a huge bull on uranium. That's Cuppy. I am too. Again, I don't know what the short term is going to do here. I see the overall market starting to turn over. I don't know if we're going to get a scare or wash sale or something like that before we enter a big squeeze. It's tough to say. That's why I don't play the short term. Ride through it. Buy on the dips. But he's right. Problem in the bond market. I know some other people mentioned it above, but uranium still looks. Um, it's still ready to squeeze, along with energy, just energy in general. Being frugal and being cheap are two different things. Where do people cross the line from being frugal to cheap? Well, I am incredibly frugal. I will say that. But I do spend money on the things that I like and I enjoy. So I don't buy cheap things. I want to buy things that are high quality, but I want to get them where you go up in value and up in price. And then right when it starts to turn a whole bunch, that's where I usually stop. I do things that just make sense to me, at least. They make sense to me. I'm not a guy that's involved with a bunch of electronic garbage. I'm not a techno guy. So I want a car that's got roll up and down windows by your hand. Why? Because they never break. They hardly ever break, unless you break your arm, I guess. And I like cars that are really simple and cheap because they generally last longer. The parts are cheaper. They're easier to do maintenance on. And you've got less things to do maintenance on. The rotors are cheaper. The brakes are cheaper. You only have 4 spark plugs. You get better gas mileage. The insurance is cheaper. The registration is cheaper. It goes on and on and on and on. The tires are cheaper. So I just do that. Now, where does that cross the line from frugal to cheap? I don't know. I also compartmentalize my stuff. So I buy a cheap car for a daily driven car, but I buy what I think is a very nice sports car for a cheap price and put good components on it that I, put the work into. So I don't know. I mean, that's where I'm at. I think I'm very happy with what I've done in my life. I'm very content. I'll just put it that way. I didn't buy a cheap house. I bought a nice house. So I didn't go cheap there. And I didn't go cheap in a lot of other things. I hardly ever go cheap. I find the price to value point, and that hence is finding value. That's really what I do. I try to buy things that are expensive for really good prices or really good valued things. People think millionaires live like kings, but they don't realize that we already all live like kings. We eat gourmet meals, have entertainment at our fingertips, watch sports for leisure, and travel to faraway lands. You already are a king. You just never knew it. It's true. We got Grady here. He's got a lot of good charts, guys. The breakdown from this 15-year bearish pattern is just another brick in the bullish, glorious commodities wall. Now backtesting from below. When stock market cannot outperform inflation, global capital will need to move to commodities. He's talking about that big asset rotation. What this is a big he's climbing a big wedge. It's broken to the downside, doing a retest. Then we'll eventually roll on over where PPI starts to outperform the S&P 500. This is your first wave. This is your second wave. This is they call it a bull trap. It's a bull trap for the S&P 500. That's why when we look at this chart and we see this could go down, that's why we're seeing the S&P 500 top. That is why we're seeing the NASDAQ top, is because inflation is about to outperform the S&P 500 and the NASDAQ. And that money's going to rotate, big asset rotation, into commodities and precious metals. Just like all the other commodity bull markets. It's all looking the same. The second inflationary wave is soon starting. This chart shows lumber backtesting support a third time as expected. This time will increase volatility. The push narrative is inflation is done. No, it's not by a mile, unfortunately. Lumber doing a backtest. I know a lot of people saw this come back down. They're like, oh, it's a housing market crash. It's like, no, this is going to turn around and go back up. That's why Buffett is buying D.R. Horton and Leonard Corp. He is positioning for the home builders because the home builder is about to outperform. Buffett knows the real estate market, sounds like, and he knows what's coming. So let's get this thing going. Let's move. Now, could we get a little bit of a pullback in the overall markets? Could it draw us down? Yes, it could in the short term. I never deny that. But everything does look good from a charting perspective on a long-term basis. Tavi says, the importance of this chart cannot be overstated. Investors expecting global inflation to decelerate is the most consensus view in the history of the data, even lower than during the global financial crisis. This is consistent with how market participants are the most bullish on long-term treasuries they have ever been, as indicated of the B of A Global Fund Manager Survey. Crowded market views are often wrong. The current inflationary forces appear to have a significant underlying structural foundation. So, inflation expectations, everybody thinks inflation is going to come back. The majority of people. That is net percent expecting higher global CPI. Hardly anyone knows. That's generally when it turns. Look at this in '08 and 09. Boom, up. So we're probably going to move up at some point, and gold's going to take off, precious metals are going to take off, and then our energy is going to rip. It's all coming, it just takes time. Be patient, everybody, be patient. And that's where I'm going to end it. So that's what we've got for today, guys. Give me a thumb up for the content, subscribe to the channel, subscribe to the website if you'd like. Lots of good information there. And that's all I've got for today. So we'll catch you next time. This is Finding Value.